Hello, ladies and gentlemen. Greg Michalowski from ForexLive.com. This is a Forex Quick Look. We're going to take a look at the dollar versus Swiss franc. Today's date is July 15, 2024. Let's get started. Looking at the 1 hour chart, what we saw over the last few days is a sharp move to the downside off the CPI data, then a sharp move back to the upside. That move to the upside came into this cluster of moving averages. This top blue line represents the 100-bar moving average on the 4-hour chart. This lower green line represents the 200-bar moving average on the 4-hour chart. This smoother blue line right here represents the 100-hour moving average, and all those moving averages came near each other through here. The market found willing sellers against that level, pushed to the downside during Friday's trade, closing near the lows and also near the 50% midpoint of this move to the upside from the June low to the July high. That 50% came in at 0.8938, and the price came down back toward that level toward the close of the week. In trading here today, we saw the move to the upside here after the weekend assassination attempt sent flow of funds into the US dollar for whatever reason, and the price, higher yields, I guess, and the price moved above the 200-bar moving average on the 4-hour chart, and then but tested the 100-hour moving average. We fell short of the 100-day moving average on the same chart, and also coming into focus here is the falling 200-hour moving average. So all these moving averages, just for your guide, are what is going to be the key resistance, not only today but going forward. As long as the price remains below those levels, the bias remains more to the downside. If the price were to move above those levels, then things would be more bullish to the upside for this currency pair. So with that said, obviously the price started to move down and away from that level, and in the near term we have moved down to test that 50% retracement level, and we're currently trading just above it at 0.8940 after trading below it on a number of different times here, including last Friday, of course. But we need to stay below that 50% retracement to keep the sellers more happy and satisfied, and then we'll look down toward the 61.8% retracement, which is where the low price off of the CPI data came down to test and found willing buyers. So resistance up here, support or a support down here at the 61.8% retracement, and in between sits the 50% retracement that is going to be our key barometer for trading here today. So that's my technical look at the dollar versus Swiss franc. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.